Hello and welcome to the Byline, where we explore the strategies and technologies that are transforming modern finance. I'm your host, Chris, and in today's episode, I'll be talking about a problem that almost every finance leader has experienced: invoice overload.
Yeah.
If you've ever walked past your accounts payable team and seen their desks piled high with stacks of paper, or if you've spent the end of a quarter chasing down approvals just to close the books, then you know what I'm talking about. It's a drain on your cash flow and a genuine risk to your organization's financial health. In this episode, we're going to dissect this problem piece by piece. We'll look at the hidden costs lurking in your manual AP process, and then we'll map out the solution, from standard AP automation all the way to a fully unified, proactive procure-to-pay system. So let's paint a picture of what we'll call the anatomy of invoice overload. It starts with what you can see: the labor costs, the hours your team spends manually keying in invoice data, physically routing documents for signatures, and stuffing envelopes or filing papers in cabinets. But the real damage is happening beneath the surface, in the hidden costs. Think about late payment fees. When an invoice is sitting on someone's desk or lost in an email chain, you miss payment deadlines. Those fees add up. But even more costly is what you're not gaining: early payment discounts. Many suppliers offer a 1% or 2% discount for paying early. For a growing company, that can represent tens or even hundreds of thousands of dollars in savings a year that are just being left on the table. This is a direct hit to your bottom line. Beyond the financial labor, there are the operational nightmares. A manual process is a slow process. We've all seen it. A key manager is out of office, and a stack of invoices sits waiting for approval, which delays payments to critical suppliers. This both strains your vendor relationships and makes agile financial management impossible. How can you have an accurate picture of your liabilities for your month-end close when you don't even know where all your invoices are in the approval pipeline? You can't. Your forecasting becomes guesswork. And this brings us to the most serious issue: risk. When a human is typing numbers from a piece of paper into a system, errors are inevitable. Even a misplaced decimal point can lead to significant overpayments or underpayments, which creates reconciliation headaches that take hours to fix. Even worse is the risk of duplicate payments and outright fraud. A manual, paper-based system lacks the central oversight to easily catch when the same invoice is submitted twice, or, more maliciously, when a fraudulent invoice slips through. So, we've established the problem. It's expensive, slow, and risky. Now, let's talk about the solution. The first and most common step is AP automation. This is where software steps in to digitize and streamline the entire workflow. It works like this: invoices are received electronically, and technology like optical character recognition, or OCR, reads the document and automatically extracts all the key information. No more manual data entry. The system then automatically codes the invoice to the right general ledger account and routes it through a custom digital approval workflow. Managers get an email, click a button to approve, and the invoice moves on. The entire process is tracked in a central dashboard, so you have complete visibility at all times. This is a huge leap forward. It dramatically cuts processing time, reduces errors, and gives you that much needed visibility. But I want to challenge you to think a step beyond this. Standard AP automation is fundamentally reactive. It's a fantastic way to deal with the invoices you receive, but it doesn't address why so many invoices have problems in the first place. The most forward-thinking finance leaders understand this. They know that most AP challenges, like price discrepancies, quantity mismatches, and unapproved purchases, don't start when the invoice arrives. They start when the purchase is made. This is where the concept of a unified procure-to-pay, or P2P, platform comes in. Instead of having a separate system for purchasing and another for accounts payable, a unified system like order.co brings them together. It controls spend at its origin. Imagine that an employee needs to buy something, so they log into a guided marketplace with pre-approved vendors and pre-negotiated prices. The budget and approval workflows are already built in. When they place the order, it's guaranteed to be compliant, correctly coded, and fully approved from the very start. By the time the invoice is generated, it's not really an invoice in the traditional sense. It's simply a request for payment against a purchase that is already 100% correct. There are no discrepancies to match or resolve because you prevented them from ever happening. The AP process becomes a simple, automated payment transaction. This also solves another massive headache: vendor management. Instead of your AP team cutting checks or initiating ACH payments to hundreds of different vendors, a unified platform can consolidate everything. The platform pays your vendors directly, and at the end of the month, you get a single reconciled invoice for everything your company bought. Your team goes from managing hundreds of payments to just one. The administrative savings are immense. So, how do you get there? Let's quickly walk through a roadmap. Step 1 is to assess your current state. You need to map your entire invoice to pay process as it exists today. Identify every bottleneck and calculate your baseline metrics. What is your current cost per invoice? What is your average approval time? This data is crucial for building a business case and measuring your return on investment. Step 2 is to define your goals. What do you want to achieve? Don't just say, be more efficient. Get specific. For example, reduce invoice processing time by 75%, or capture 90% of early payment discounts, or eliminate all late payment fees within 6 months. These become your KPIs. Step 3 is choosing the right technology. Not all platforms are the same. You need a solution that integrates with your ERP, offers flexible workflow customization, and provides the powerful analytics you need to get strategic insights from your spend data. Finally, step 4 is to plan for implementation and adoption. This is a change management project as much as it is a technology project. Communicate the why to your team. Show them how this new system will eliminate their most tedious tasks and empower them to focus on more valuable work. Get their buy-in early, and the transition will be infinitely smoother. So, let's recap. Manual invoice processing is a far bigger drain on your business than you might realize. AP automation is a powerful first step toward fixing it, offering speed, accuracy, and visibility. But the ultimate goal, the true transformation, comes from unifying purchasing with payments in a single procure-to-pay platform like order.co. This approach eliminates invoice overload at the source. Thanks for tuning in to this episode of The Byline. Don't forget to follow the podcast to be notified when new episodes are released. Until next time.